guys, welcome back to Fear Being Average, and today I'm going to be going over what I've learned trading US30 for the past year. So if you didn't know, for the past year and about 2 months I've strictly traded US30. I've taken a few trades on other pairs such as Bitcoin here and there, but overall the majority of my trades are all on US30 for the most part. About maybe I'll say 98% of my trades have been on US30, and the only thing I've been focusing and putting my time into is US30. And I'm sure you guys can tell by all my charts. I literally got rid of all my charts. I'll look at NAS 100 here and there because it replicates US30 a lot of the time and you can see confluences, but I do not trade NAS 100. So let's just get into it. I'm making this video to teach anybody that's getting into US30, or even if you're still trading US30 and you've been trading it for time. These are the things I've learned personally with my experience with US30 that have benefited me, or just gave me a little edge and understanding of the market, understanding when certain characteristics happen. I know what to expect. So the first thing I'm going to be getting into is the New York Stock Exchange Open. When I first started trading US30, I had no idea what this was. I just knew that at 9:30 a.m. I was noticing that there was a lot of volume getting pushed into the market, and there was a lot of times those setups being made I never would have been able to catch. So for example, let's just go to the 30-minute chart. We're just going to go to a few examples of where 9:30 happens and what happens afterwards. So let's go. I got this right. Got to move my book with all the notes so I can see my screen. Let's see. Right here, look at this candle right here. This is a 9:30 candle. Look at the volume. Push down, had a retracement, push all the way up. That's one 9:30 candle. Let's look over here. This candle right here is a 9:30 candle. Look at the volume. Cleared the highs and cleared these lows. This was an inside day though. Another example right here. 9:30 candle. Big drop. Let's look at the next day. Where's 9:30 candle? It was a big doji. Let's go to the week previously. What is this? 9:30 move. Look at this. Cleared the highs. Pushed all the way down. Let's look right here. 9:30 move. Traded back to this order block, expansion afterwards. What happened right here? This is a 9. I'm on the 30-minute. Where's the 9:30? This is the 9:30 candle right here. This move that cleared these highs, traded into this order block up here before trading down, before overall clearing these lows and going higher. Let's look at the next day. Right here, right before this move, we had a small retracement before going higher at 9:30. Guys, this isn't anything crazy, but it gives you an edge. It gives you an opportunity to let yourself not take any trades and wait for this certain time of day. It just gives you a different level of discipline. It keeps you out of unnecessary trades. It keeps you in markets that are more likely to move, because the thing is, the few things we need to be successful in trading is we need volume and we need system. So if we can basically find where the volume is at a certain time, we can map out certain trades that happen at that time. And if we don't see it, we don't take a trade, we don't take no risk. But if we see it, there is a high probability that you'll be able to have a winning trade. So that's why understanding when the New York Stock Exchange Open is very key. This is something that I didn't learn too early on, but after I learned, it was a game changer. And I've been able to map out a lot of trades and a lot of volatility at this time at 9:30. So let's move on to the second. I'll put back. The second thing is the US30 tends to have a false breakout before a major move. So I'm going to show you a few examples right here. So when you put the two time and price together, let's now anticipate price to have a certain move at 9:30 and possibly have a false break. So right here you can see this was an example of a false break. Price traded above these highs before overall going the opposite direction. This will be an example for a false break. And what time did it happen at? Traded into this area at 9:30 before having a reversal. So that's one example. Let's look for another example. Right here at 2:30, we had a false break before it had a move that then cleared these highs and these highs up here. These are two examples of a false break before a major move. We're gonna find more. Another one right here at 9:30. What happened? We went and cleared these lows, false break, trading into a order block on a higher time frame. I'm not going to mark it up right now, but you can see we had a break below a low. We didn't keep going down. we then started to trade upwards right away. Let's look for another example. I'm gonna find some more on the left because this week wasn't the best week trade wise. So let's go back over here. Let's look for examples of false breaks. Where do we have one? Right here. This wasn't a false break, that was actually an equal high, but we broke this high right here before then trading down lower. And what time did this happen? This was around New York session. We started making a high of the day before then trading all the way back lower. Let's look for another example. Right here, 9:30, price traded below this low, traded into this order block right here before then trading even higher. This is another example of a false break before a major move. Let's look at another example. We're going to move that over even more. We're going to look right here. No, that's not a good example. I want to use certain examples. Let's see. Right here. What time is this up here? Can't even see. That's 10 a.m. What happened? Price came above this high, had grabbed the liquidity, had a false break before then trading even lower. That's another example of a false break before a major move. I'm going to find another example for you guys real quick. And let's see right here. Another false break before trading lower. At what time was this? This was at about, this was right here. It was about 12 o'clock. 12 o'clock. That was right there. But you guys can see there's, before a major move happens on US30, a lot of the time there is a false break. It doesn't mean all the time is going to be a false break, because there are case scenarios where price will not have a retracement, not have a false break. It will just continue to go in its overall intended direction. But that's another thing to keep in mind. If you see that certain things are happening and then a false break occurs at a certain time during US30, you can anticipate there is a lot of probability that's going to see a reaction after that false break. It's not always going to happen. There's a lot of things you got to put. There's characteristics to look for in certain concepts you want to see in play. But overall, just keeping in mind the simple idea that if you're looking for a major move, at least wait for price to take out sell side or buy side liquidity before having that move. We're going to move on to our next thing, which is very important. This one is very important, and I struggled with it since day one. But you got to understand, when US30 is trading at all-time highs, there is very few trade opportunities. For example, right here, this move, see this major move? When there's moves like this happening in US30, there's little to no room for any trade opportunities. And this is 1, 2, 3 days that you wouldn't have really been able to get into a trade. The only trade opportunity you possibly could have caught was this false break trading into this higher time frame order block down here, which I think was a 4-hour order block. Yeah, right here you can see 4-hour order block rejection, traded below this low, then started going higher. When opportunities like this happen, there's very little opportunity to have day trades. This is when the higher time frames are having a major move. So for example, I'm gonna go to the weekly right now. I'm gonna show you why price was expanding so much. I know it was expanding so much because if you look left, you see that we were overall at this bullish weekly order block. And if you get to 50% of this order block, you can see we were respecting it for 1, 2, 3 weeks. We were respecting this area. And this is a bullish confirmation. And you can see once we finally got the momentum we needed, price started taking off. And you can see that based off of the 4-hour and anything, all the lower time frames, that this expansion was very big. This is about a 1,000 pip move within the last 2-3 days with a little retracement, little to no retracement. If you go down to the 30-minute, 15-minute, the biggest retracement we had was about right here probably, and it was only for 100 pips. So a 10% retracement out of this whole move, which is crazy. But you just got to understand, when price is trading at these areas and and it's just expanding, there's little to no room for potential trades. I'm going to find more examples, such as up here. When price was making an all-time high, there's also very little areas to get into trades. Why is it very hard to be able to trade at all-time highs? Because you have nowhere to look left. That's the big part. There's nowhere to look left. There's no targets. The only thing you could target are big figure levels, and you can only use what's happening previously in the past. So it makes it hard for price to have good trade opportunities when it's trading at all-time highs. And that's something that I've personally learned with US30. It's something I personally stray away from. I don't like to trade when price is having major expansions or trading at new all-time highs, because I know from personal experience that I'm not going to have as much opportunity as I would like. We're going to move on to the next thing. The US30 is making higher time frame expansions stay out. That plays a part with what we were saying from the previous one on all-time highs, but it's right here. Say for example, like I said, when price is having a weekly move, it's going to be very hard to get day trades because price is going to move fast and it's going to move to where it wants to go. And you can see that from here. Price knew where it wanted to go, had little to no retracements, and kept going. When you have cases like this, the best thing you want to do is try to hold any winning trades and just let them keep on running, and that will be your trade for the week, because if within these 3 days there was very little room to be able to get into a trade without just buying just to buy. Next thing, 12 p.m. Eastern Standard Time offers many reversals. This is something I've noticed a lot. I'm not sure the real reasoning behind why it has these reversals at around this time, but I think it's because you got to understand the market moves from people putting in money. And when the New York Stock Exchange opens at 9:30 in the morning, there's a lot of people coming into the market, meaning there's a lot of volume. So when at 12 o'clock, that's the time where a lot of people that were then putting in the orders are no longer putting in the orders, and they're now going on breaks, they're going on lunch, so there's less volume. And when there's less volume, you can tend to see that retracement or reversal from the overall move that happened during the New York Stock Exchange Open or early New York session. So when you're paying attention to 12 o'clock p.m., let's just show you some examples. But when you're paying attention to certain things happen at around 12 o'clock, such as right here, you saw that we were losing momentum after having a big expansion for the past 2 days, and after having a big expansion all day this day, you can see at 12 o'clock we start losing momentum after then having a retracement that then overall turned into a reversal signal after price traded back into the order block that was created at around that time. So this is one example of 12 o'clock being a reversal. We're also going to look at more, such as right here. This is when price started to reverse. This isn't a reversal signal, but you can see at 12 o'clock is when this move really started to play off. Like I said, this week is a bad example. I'm going to show you previous weeks also, such as right here. This candle, this down candle, was the 12 o'clock candle. What happened? Price retraced back into this order block before going all the way back higher. This was at 12 o'clock. That's a potential trade opportunity you could have taken. Let's look back over here. What do we see? At around 12 o'clock, price started to consolidate after clearing this high right here. So that's two things I've taught you guys that we could expect after a false break. We're losing momentum. There's going to be an opportunity that could possibly happen. We're looking at time. We see that's 12 o'clock. We're starting to consolidate. We can anticipate price is either going to have a retracement or a reversal. You can see price had a reversal coming all the way back down, making equal lows down here, before then again at this 12 o'clock having another reversal. I'm going to show you one more example of this happening. But all these concepts, guys, you don't got to believe me. Back test them yourself if you don't believe me, because at the end of the day, I don't care if you believe me. I know I'm showing you the market right now. The market isn't going to lie to you. I could lie to you, but the market and the charts aren't going to lie to you. Look for another example. Let's see. Look for 12 o'clock. 12 o'clock. Right here, you can see, what time is this? 12 o'clock, starts to lose momentum. Even though this wasn't a major move, you can see we had a small retracement at around 12 o'clock. Let's see, another one right here. You can see price started losing momentum. We were trading at this order block. At 12 o'clock right here, we started to have a doji. That's showing you that there's a willingness, and there's not really a willingness to keep going lower, because if it did, it would have had bigger down candles, but it was breaking highs, created a doji, and you can see from 12 o'clock we had this push higher. So you guys can see this and back test it yourself, and trust me, coming from someone that trades US30 every single day, I'm telling you, a lot of the times there is going to be a retracement or a reversal from 12 o'clock. It might not be exactly at 12, 12:30, 12:45, but at around those times within an hour, you can anticipate if you're losing momentum and you're trading at a higher time frame, basically support area or resistance area, an order block, breaker block, or you're trading inside of a fib zone, you can anticipate there is likely going to be some sort of retracement or reversal. So that's just a little tip for you guys. Another thing, you don't have to have large stops on US30. Personally, with me, from my experience, I used to use 100 pip stop loss. But after trading US30 every single day, if you're only trading high probability setups, you only need about a 35 pip stop to a 50 pip stop, and that's on US30. And that's coming from personal experience because I don't use anything larger than about a 50 to 55 pip stop. I tend not to go past 60. 60 is like my real max of a stop loss. But I'm showing you guys, when you map out certain trades and you're looking for certain confirmations, it gives you the opportunity to have a certain amount of pips as a stop loss. And if you use the concepts that I teach here on my channel, you can use these. You can back test it and you can look at it. You don't need to have major stops. So let me just show you all the examples I showed you. So let's look for a potential false break at 9:30 and looking for a move. So let's see. 9:45. Let's just use this example, this random example. We're anticipating that since price had this drop at 9:30, 9:45, we cleared these lows, we traded into this 15-minute order block down here to the pip. We traded to this order block. So now we're expecting price to potentially go higher. So let's say we didn't even get in at this order block. We got in a little bit higher. We got in when price had this false break scenario. Keep in mind now, if you have this stop like this is about a 90 pip stop. This is a big stop. Let's say now you waited for price to come to this order block, or you waited to potentially come fill in these gaps or something. You don't need to have a wide stop. Let's just keep it on 50, and we're going to look at potential trades that we potentially could have caught. If you would have got in somewhere in between here at around this order block, this trade would have been safe. We're going to look for more examples. Let's look for another example at 9:30, like I said. For this example up here at around 10 o'clock, we got our false break scenario. So that's one thing we're paying attention to. We're also keeping in mind that we're trading at this order block on this higher time frame. So from here, we had two confirmations for why price should likely have a potential move. We're putting time, we're putting certain confirmations, and we're looking at certain characteristics that the market is showing us. So we see that. Now let's say we try to get in this trade at this order block. We don't get in anywhere else. We just wait for price to come here and we get our trade here. Let's see, a 50 pip stop would have never got touched, and it offered about a 1 to 13 trade, 655 pips max. You didn't have to take that. Even if you had a 1 to 1 easy trade, that would have been filled within an hour. And if you let it go to about a 1 to 2, 1 to 3, it went all the way there. That's why you put time, price, and you're looking for certain characteristics to transpire, because when they all play a part, you can get a lot of good trades. We're going to look for another example. Let's see, right. I'm trying to look for another good example. Let's say right here at 10:30, 10:45. So let's say we were anticipating price to have a continuation. We have, say, our fib. It was maybe rejecting the 38.1%. Let's see. Kind of respecting it. Let's just use the bodies, the candles. I think that's going to be our better trade. Nah, that's not really. Let's see. Let's pull it from the London low. Let's just say it came down to this 62%. It came really close. So we'll just use this as an example since we're here. Say we were looking for price to trade lower, trade into the 62%. Say it does trade lower. In this case, it really didn't. But this is a rare case that it's 1 pip away. So to say that we trade, we have our pip stop loss about 50 pips. In this case, you wouldn't have got put in this trade, but if you did and it came down to that pip, it would have had 0 to no drawdown. This is a bad example, so I'm going to show you one more before. So right here at 9:30, price had this false break above these highs, but what did it trade into? It traded into this order block right here. So it had a false break, traded into an order block. We're also going to pull our fib from that high to this low. And I can see it's more than likely a 38.20% rejection. So right here, this is a good trade scenario with all the things we're looking for. 9:30, so time, and we were looking for certain characteristics. We saw that it had a false breakout and traded into an order block. So that's all we needed for a potential trade scenario. So say we get in at this order block with a 50 pip stop. 50 pip stop would have never got tagged for a potential that overall gave us about a 1 to 20 trade with about 1,000 pips. But like I said, even if you didn't hold it and you held this trade for about an hour, you could have got a 1 to 2.5 trade you held it for a little bit longer. One to 6, a little bit longer. 1 to 12. It all depends on how long you're willing to hold these trades. But like I said, when you put these characteristics together, you're able to formulate a certain amount of trades that are high probability. So like I said, you don't have to use 100 pip stop losses like I personally used to. You could use about a 35 to 50 pip stop when you're starting on US30, and this will give you the best opportunity to catch the daily range, which offers at least 100 pips a day. So if you have a 50 pip stop, you at least know that you could potentially get a 1 to 2 every single day. And that doesn't mean you should trade every single day, but it's just, I'm telling you that there's opportunities every day. Okay, and that leads into our next part. US30 offers at least 100 pips every single day. And like I said, it doesn't mean you should trade every single day, but it means there's opportunity every day, and that if you lose a trade, don't worry about it. You can make it back plus more tomorrow, and if you lose that trade, you can make it again plus more. Let me just show you guys a few examples of the daily range. So overall, from the high to the low this day is about 650 pips. From the low this day to the high this day is about 300 pips. From the low of this day to the high of this day is about 360 pips. Let's go over here. The low of this day to the high of this day is about 440 pips. From the low of this day to the high of this day is about 690 pips. From the low of this day to the high of this day is about 520 pips. As you can see, every single day, the daily range is at least 300 pips. So if you're able to catch about 100 or 75 pips of those, that's all you need. You don't need to catch the full move. You just need to be able to catch a portion. And when US30 moves this much, you can catch a small portion of the cake, and that's all you need to be able to be successful. On to the next one. Higher time frame setups form the weekly buys. And what I mean by that, the daily is very important, especially on US30. You can see when it trades to certain concept areas that we talk about, such as this daily order block right here. You can see that the reaction it has from here came down to it once, traded into it a little bit. From here, it was about a 1800 pip move. From here, traded into it again, had about a 1200 pip move. Traded into this area again, now is at about 1500 pip move, based all off of higher time frame analysis. And this is how you get your daily buys. If you see, let's say for example, you're right here at price. You see that the previous day traded into this order block right here, and it's starting to lose momentum. So say we're like, okay, that's one confirmation. We pull our fib from this high to this low. You also see that came close to the 62%, but then you put your 38.20%, and you can see that it's currently right above it. So you can put all these confirmations together based off of your higher time frame analysis. So now when you're trading on intraday and you're looking for trades, you're looking for only buy trades. And what happens? You're able to catch a good buy trade. And you, like I said, this whole move is from this whole day is about 585 pips. If you only wanted to catch 100, that's all you needed. If you would have been somewhere in the middle looking to catch 100, you still would have been able to catch it. So higher time frame analysis is very key, and make sure you look at the daily time frame every single day, because every day if you look at the daily time frame, you're going to have the best probability of being able to understand where price is more than likely going to move to. And the last tip I'm going to tell you guys is the New York session is all you need to trade US30. You don't need to be trading London session. You don't need to be trading Asian session. Every single session is going to help you if you're trading New York session. If you trade New York session, you can use the Asian session and the London session of the previous day or the previous sessions, and you can use that to formulate other setups. So for example, I'm going to show you guys that right now, just little examples. And if you watch my video previously on how to anticipate daily highs and lows, you're going to understand why London session is so important. You're also, if you watch my Asian session, why it's so important, you're also going to understand that also. So let's just go to this area right from the previous area here. I'm going to show you guys this again. We're going to mark up that Asian range, which was all the way back here. We're going to mark up the Asian range. Then we're going to mark up this London session. So I'm going to make this blue. And we're just going to look at these two sessions. So we let these two sessions happen. Then we look for our trade during New York session. So what happened during the Asian session? You can see that Asian session tends to consolidate. So that's why we don't trade it. We look for reactions off of this Asian session. So for here, you can see price was consolidating. It was even consolidating during the London session. So what can we anticipate? When price started to move higher, we would have waited for a retracement to where we would have used this London session. We knew London session didn't have a false breakout, so we know that there's a chance that it could continue moving or have a possible reversal. So what do we use? We use the order block created during the London session, right here at 5:30, right here at 3:30. You can even use this one right here, but you would have missed this trade. So we use the one at 5:30. You can see price traded down to it at 8:15, traded right into it. And if you would have pulled your fib also from this low to this high, you can see we had that fib rejection. And if you also would have pulled your fib from this low to this high here, and then put the 38.20%, you can see that it got close to that also. So if you would have maybe used the wicks of these candles, in this case this fib wouldn't have worked out, but this one right here, you can see. But this was a trade based off of London session. We used London, what happened in London session, to form this trade. We also looked at what was happening during the Asian session, and we saw that that's how we mapped out our trade. So when you trade New York session, you can use other sessions to basically add to a confluence for why your trade should go a certain way. When you're trading London session, the only confirmation that you have session wise would be the Asian session. And that's not enough for me personally, because if you can watch the Asian session, look at what's happening overall, then see what happens during London session, you can then anticipate what is likely to happen next, because there's only a certain amount of hours left during the day. So if you can formulate a bias for what is more than likely going to happen based off of what already happened, you're going to be good. So this is really it. There's a lot more things that I've learned from US30, and if you guys want a part 2, just make sure you hit that subscribe button, make sure you like the video and comment down below part 2, and I'll be sure to add it. But this is so far some of the main things that I've learned from trading US30 for about 1 year and 2 months. These are things that really changed the game, and once you tone down on these characteristics of this pair and you back test them and you watch how often they happen, you're going to change the game. So hopefully this video was helpful. If you did, make sure you like, comment, subscribe. I'll see you guys in the next video.